Ladies and gentlemen, and thanks everyone for being here. I'm very glad to see so many friends here on this panel. And what I would like to talk about, I will give a brief presentation on how we in Trident see the investment climate right now in the region. And I would definitely be very much glad to engage in the discussion after a while. Firstly, a few words about Trident, because it's a kind of rare animal. We have the next slide, please. It's a kind of a rare animal for the region because we are SPAC. That's one of the most fashionable investment vehicles of this year. But no, back please. Which was created in 2018. We went public on Nasdaq Stock Exchange, raising some $200 million to invest in oil and gas projects in the greater Black Sea area. We decided from the very beginning that our headquarters would be in Ukraine as well as in United States, but that we would focus mainly on activities in three countries, in Ukraine, Romania, and Poland, and the special emphasis would be done on Black Sea offshore opportunities. And our main idea was to open the region, usually because it's been dictated by private investors or by strategic oil and gas majors. So the idea was to open it for a new class of investors, which is US hedge funds, which would then be allowed to participate in the project that would otherwise be closed for them. And so as a result, we wanted, as we pitched our investors, to bridge North American capital and emerging oil and gas technologies with Eastern European opportunities. We have a very good and quality team of oil and gas professionals led by Ed Verona, which was a former country manager for CIS countries, Russia, Kazakhstan, and other countries in the region of consequently Shell, Chevron, Texaco, and Exxon. And I myself have a background with Schlumberger and Yukos Oil Company. Next slide, please. So what we have faced? We have faced a dramatic change in the attitude of investors towards the opportunities in the region. And here I am putting some graph for you to see. When we were formed in 2018, the industry just underwent a very healthy transformation in the shale industry. It was a dramatic drop in the production costs in the United States. It was a very easy access to the debt capital for the major companies that were participating in the industry. There was a huge inflow of usual outsiders for the industry in terms of investment. And basically, they were dictating the rules of the game for the producing companies. And those rules of the game was to focus on the core opportunity, so focus on one particular asset, one particular play, one particular approach, which generates you most of money, and you would be okay with the equity investment that is coming into your company. At that time, the valuations were pretty healthy, and they were growing. As you see on the graph, during 2018, they grew some 20%. Roughly, and the companies were valued at 5 times EBITDA, or we can say like $50,000 US dollars per barrel of daily production. Everything has changed in October the same year when President Trump started geopolitical confrontation with China at the first time. And that dramatically changed the demand for oil and gas output of American booming producers. investors started to lose confidence in the industry, started to go away. And as you see on the graph, within 3 months, it was a sharp decline for some 25% in the market valuations. And if before the prices for the valuations of oil and gas companies were fully correlated with oil prices, at the time they started to go separate. And especially depressed were upstream players. As you see on the graph, their valuations dropped to 3.5 times EBITDA in the United States. Europe was performed slightly better, but still there was a drop even there to like 4.2, 4.5 times EBITDA. 2019 was a year of relative stabilization, but we saw a huge disconnect between European, global, more broadly saying, and US industry of oil and gas producers. It's very much visible on this graph. The blue line on the bottom, that's upstream producers in the United States. The red line and the cyan line, these are oil prices and price for producers in Europe. And the middle line is vertically integrated majors. So as you see, Europe was performing significantly better and fully correlated with the oil prices, while verticals and US E&P players were significantly undervalued. And by basically the end of the year, the valuations dropped to 2.5 times EBITDA, and that made the industry completely unattractive for investment, because the companies were so cheap that no owners of the assets were actually willing to allow investors to come into their businesses, only debt financing. And then COVID. And we all know what happened with the oil and gas prices at that time. And that led us to the current situation that we have. Investors, especially public investors, they stop believing in traditional hydrocarbon producers. They all want to go into different types of green energy. They see fashion in there. And what is especially hurt is upstream producers. You see that this blue line is very low, and right now it's basically at 1/3 of the valuations that we saw just 2 years ago. Next slide, please. So what are the particular challenges for our region, for the greater Black Sea? No, back please. So we see that oil and gas majors essentially are pulling out, and we think that this process would continue. The industry is out of love, out of fashion for all major investors that were playing in it before. The access to capital, especially for mid-sized players, is now increasingly difficult. And so we see a deficit of new producers which are coming in. And you obviously see what is happening with the prices, especially with the gas prices. And that's especially been pressured by geopolitical factors and LNG supplies from the United States, which grew dramatically over the last year and a half. At the same time, we see increased role of government-backed companies and projects. And what was mentioned about the Turkey discovery is just another illustration of the same thing, that is a discovery which was driven by the public financing, not by private initiative. We see exactly the same thing in Ukraine in terms of developing offshore opportunities. Next slide, please. So where do we think the industry goes? So we think that the majors would get gradually replaced in the region by local and international mid-sized players. We think that we will start witnessing the process of diversification of some of the companies in North America eventually, which were originally pushed by their investors not to diversify and to focus on the opportunities in that region. We think that some of them trying to survive would actually come to the region and try to find a second leg for themselves to stay on. We think that Black Sea Shelf would eventually see the additional investment, most likely in the areas which were abandoned by the current players now. And we definitely think that Ukraine would eventually pick up. And the opportunities that exist here, both onshore, and we see a dramatic change in the regulations, very positive change, which is happening in the country, in the industry, would pay fruit, and that more and more players would emerge. We think that the government financing would play increasingly a large role, and Ukraine's Naftogaz and Turkey would most likely be the drivers for that particular process. And finally, to say that we think that local investors would be way more likely than large international names. But we think that the new financing instruments would become available in the next year. And that's probably the only way how the industry can survive and grow. With this, I would pause and would be glad to answer your questions during the discussion. Thank you.